Today is March 3rd, 2015. We have a market. Let's start with the market timing index. You'll see that we have a 5-day lower low trend happening here. 5 days in a row, we've gotten some lower lows. So we're still green market, but we're very close to turning around into a yellow market. And that being the case, we want to let all of our Market Club members know that you might want to start thinking about hedging. This is an aggressive strategy that we're going to do today. Certainly cash is a good position, but if you want to be a little bit aggressive and get ahead of a possible shift in market momentum, you could see this big red bar. That's today, and we had a big nice up day yesterday that was an engulfing day. Had a lower low, but it certainly made it a nice, looks like it pretty close to a high, and I think it did actually get a little bit higher. But with these lower lows, 5 lower lows in a row is a concern. So that's our market. It's green, but nonetheless, you want to get aggressive. That's the way to do it. So we're looking at Michael Kors, which has some pretty weak relative strength. And you can see while the market's been going up, it's tried to go up, but it's having a lot of trouble living above its 50-day moving average. It just can't seem to get out of its own way when it gets above the 50-day or the 10-week moving average. So nonetheless, we think that right now you're seeing a doji candle. That means the buyers and the sellers are at an impasse. Nobody knows what's going to happen. It's right in the middle of this envelope range, which is kind of our sweet spot for getting involved with it because we have fairly low risk, and I'll show you what that means. Let's look at the daily. So what we have here is we have this high here at 78.64. We had a big gap down, and then it went down to 65.05. See that big gap? Went to 65.05, and then it had a 618 bounce, a perfect 618 Fibonacci bounce right here. And now it's looking like it's trying to make its way down to 59.08. Right now the stock is at 67.46. So we're recommending an entry for aggressive traders only. Cash is certainly a good position, but if you want to be aggressive, we would get involved in going short on Michael Kors at right around this price. 67.40 is our entry. We'd put a stop just on the other side of this fib line, which is about 68.35 is what we would recommend. That's what our stop is right there. And we're gonna target 59.08. So we got about 8 points on the downside, 8.5 points on the downside, and just a point on the upside. Nice risk to reward ratio. We like that a lot. So if this thing keeps going down, especially if the market goes negative, this will follow in the footsteps of that. It'll certainly head to this pivot point at 65.05, and if it breaks through that on good volume, which it did, see this volume here? That's an important pivot point, important swing point. If it can do that again on higher volume, that means it's going a lot lower. You'll watch it at that spot, because if it's on lower volume, the chances are it may bounce. So we want to watch it when it gets to that spot. So that's one way to play it, is do a short here at 67.40, 67.49, wherever it is today. Or we can look at the options. And the options is a lower risk, cheaper way to play this. If you invest just a couple thousand, or even if you do invest $500, we're looking at the options that are in May. So they go out a couple of months. So about 2.5 months these would go out. And we would be looking, our target price is 60, or 59.05, I think we said. So we would look at a 60 target price. Right now the value, the theoretical value according to the Black-Scholes model is $1.03. It's about a 10% discount to that if you buy it at the ask. That's probably a fair place to buy it. So we would say target that and put in a 20 or 25% stop on that. And once it gets in the profit, then put your stop at break even.